It's my pleasure to welcome you to the Clark Howard Show. Our mission is to serve you and empower you so you make better financial decisions in your life. One way we serve you is one-on-one through our Team Clark Consumer Action Center. For roughly 30 years now, we have been available for free to answer your questions, concerns, complaints, provide info to you and guidance, one-on-one for nothing. It's really important to me that you have some place you can turn to that you can trust. And that's why we do it. And so it's made up of employees and volunteers, Team Clark. And so you can talk with one of our team members from 10 in the morning till 4 in the afternoon. Those are Eastern time zone times. And the number to call is 636-49-CLARK. So I recently talked about how what you can earn on savings accounts, money market funds, CDs, talked about the Series I savings bonds since the spring, how now you can actually earn money on your money again. But what's really funny was I read an item bashing the big banks, and no, I didn't write it, I just enjoyed it, about how the big banks find that it doesn't matter if they pay people no interest, that so many people are so tied into the giant banks, they'll just give them the money anyway and earn nothing on it. And then the bank turns around and says, oh, well, interest rates are rising, so we're going to charge more money on the money we lend to businesses and for auto loans and whatever else we do with money that we lend out. So we're just making more bank now at the bank because we're still paying you nothing on your savings and we're charging you as a borrower much more money. So do you want to play in that ball yard? Do you want to get ripped off by the bank? I mean, why do that? When I say bank, I'm talking about bank where there's a physical branch. And yes, some small local banks are actually offering better deals like credit unions do. But generally, most banking is now controlled by bigger players, and they just squeeze you. They just take advantage of you. And it's your choice if you want to be squeezed and taken advantage of. It was funny, I was looking to see what some of the big banks are paying, like Bank of America, paying 1/100th of 1% on savings. Unless you're a primo customer of theirs, then they're paying 4/100ths of 1% on your savings. Similar things at the other giant monster mega banks. At the same time, I walked into one of the credit unions I'm a member of. Actually went physically in person. I had to get a cashier's check. And the teller said, you know, we have a special coming next week. We're paying 3.3% on CDs of up to 33 months. I was like, really? And so I put some money into a CD there because it's been novel. I mean, when's the last time you saw 3.3% on a CD? Because you can only put so much money into those Series I savings bonds I talk about that are paying right now triple that. But anyway, if you don't know what I'm talking about, go read our briefing at clark.com on Series I savings bonds. So if you do business with Fidelity Investments or Charles Schwab, they're both paying over 2% right now on money market. Now, they've got a ton of different ones you'll see, and depending on your circumstance, if you're going municipal, you're going regular, you're not going to earn over 2 on municipal. But you'll see all the different choices of the money market accounts, and several are paying over 2% interest. Again, if you got money sitting in one of those giant monster mega banks, you either hate yourself or you just don't know that you hate yourself. No, you just don't know and you haven't done anything about it. Don't let inertia be your enemy. Move that money. A lot of the online banks offering really good rates. You know who's a big backer of the online banking sector? Somebody who's such a traditionalist, Warren Buffett. And he, I think, is the largest owner now of Ally Bank. And Ally Bank offers much better deals on savings, even though Ally, as an online bank, has actually become I said actually like 3 times, has become a pretty large bank by itself. But because they're online only, they don't have all the normal bank overhead. And so they can pay you much better deals. So we're headed towards over 2%. And from here, who knows? Maybe we're still headed higher. Depends on how successful the Federal Reserve is at wringing inflation from the economy. It's going to take longer. Wall Street's been declaring victory over inflation. Not done yet. But we have turned a corner on inflation. It's not going the wrong direction now, but it's not defeated yet. So for a while, we should see better rates on savings, CDs, money market accounts, money market mutual funds, and the like. And we'll continue for a while because the Series I savings bonds, the rate resets that you earn every 6 months. We're going to continue to see decent rates of earning on the Series I savings bonds for a while to come. So the most important thing is do not let your money sit and rot at a traditional bricks and mortar bank. Again, unless you don't like your money.